A Theosophical View of the Wall Street Crash by Dave Marsland of Cardiff Theosophical Society. One crucial factor that signalled the eventual stock market crash of 1929 was the creation of asset bubbles and overvaluation across multiple sectors of the economy. The thought forms that created the asset bubbles and overvaluation were so powerful that almost nobody predicted the 1929 crash. As the stock market boomed, prices detached from underlying company fundamentals, leading to overvaluation. The real estate market, fueled by exuberant optimism, experienced a similar phenomenon. People began investing in real estate with the expectation of continually rising prices. The simultaneous inflation of both the stock and the real estate markets served as ominous indicators of an unsustainable economic situation. In exploring the omens preceding the stock market crash of 1929, Blavatsky and Theosophy takes into account the significance of thought forms and the emergence of asset bubbles and overvaluation. During this period, there was a collective mindset among investors that fueled the rapid rise of stock prices, creating an atmosphere of irrational exuberance. This phenomenon was driven by a belief that stock values would continue to soar indefinitely, leading to an influx of speculative investments and an artificial inflation of asset prices. The unchecked optimism and disregard for fundamental economic indicators set the stage for an impending disaster as the market became detached from its underlying value. As such, understanding the role of thought forms and their contribution to asset bubbles and overvaluation is crucial in comprehending the omens that foreshadowed the devastating crash of 1929. The thought forms created by investors were so powerful that despite the devastating consequences of the stock market crash of 1929, there were still individuals who attempted to make money on the stock market in the aftermath. While the crash resulted in widespread financial ruin and a loss of confidence in the market, some investors saw an opportunity to capitalise on the plummeting stock prices. These individuals believed that they could purchase stocks at significantly reduced prices and sell them for a profit once the market eventually recovered. However, it is important to note that these attempts were often met with limited success or outright failure, as the economic downturn following the crash persisted for several years. However, many people did become more cautious and hesitant to invest in stocks. The stock market of the 1920s was undoubtedly influenced or even driven by the desire principle, karma manus, as investors were driven by a fervent desire for wealth and prosperity. The allure of easy money and the promise of financial success fueled a speculative frenzy as individuals from all walks of life sought to capitalise on the booming market. This desire for wealth was further amplified by the prevailing culture of consumerism, which encouraged people to spend and invest beyond their means. Consequently, the stock market became a symbol of wealth and status, with investors driven by their insatiable desire for material gain. In analysing the omens preceding the stock market crash of 1929, the concept of thought forms and desire is a significant factor to consider. Boom and bust situations are mostly driven by human emotions and aspirations, which lead to an almost fantasy world in which many believe. With regard to the 1920s stock market, many were drawn to this illusionary world where individuals were driven by greed and blinded to the potential consequences.